the what 20th of January 2015. It's time for our daily Forex strategy session brought to you by Forex Market Strategist. Right now, 7:30 in the morning, New York time, London lunch. We got a strong pound, strong euro, sort of neutral Swiss franc, very weak yen, very strong dollar. Aussie's pretty good. CAD is very, very weak, and Kiwi is very weak. So let's get this party started. Let's plan some trades, huh? All right, so we got a lot of requests for various currency pairs. Let me scroll back up the chat box. Let's see. Frank says Aussie dollar. Wyatt says pound dollar. Jim says all yen pairs. Rick says dollar yen. All right, so let's go through those. If you have any other requests, please type it in. If you have questions, type it in. Let's get going. On this particular setup, this is euro dollar, and you may see these dotted lines. These are the open of trading sessions. You can see we're still in the pre-New York area. Haven't made a low for a while, hey, Brew? What do you want to do? What do you want to do? Well, euro is fairly strong. People might be backing out of some of the short euro positions. Why? Well, we know we got on the 22nd the key event risk of the week, and that's the ECB meeting. Maybe that's come into play now. People are just wanting to be a little less short. And you know, I don't know. What do you think? What do you think Draghi's going to do? I mean, everybody knows it's 500 billion. What if Draghi comes out and says he doesn't want to do quantitative easing yet? I mean, the ECB always surprises me how slow they are, even when I expect them to be slow as, you know, molasses on a cold Georgia morning. It's amazing. I'm always shocked at how slow the ECB is. So the whole world is certain the ECB is going to introduce quantitative easing, right? So what if they don't? So then the next scenario is, what if they do announce quantitative easing, and then it's the 500 billion everybody already knows about? Well, everybody knows it's not enough. So that would be a disappointment. And so the upside would be, what if Draghi says it's 1 trillion euros, not 500 billion? Well, that's not that good, right? Well, first of all, it's not likely. They just don't have the money, and, you know, I don't know. So what if they did something like, we're going to start with 500 billion, and we'll do it as long as it takes, with as much money as it takes, indefinitely. QE infinity right off the bat. That would shock the market, right? If he comes out and he's like, you know what, it's only 500 billion, but we're just, you know, we're putting together, we need to do something fast. Bang, 500 billion, and it's QE infinity. Whoo! The attitude of it, right? So, should be good. But we don't know which one it's going to be, right? So maybe people are backing out on the trade. Been burned on the Swiss franc, they're going to play this one conservatively, right? Right? So, how do you want to play this? I wouldn't even say it like that, right? But you can see people are backing out on this, right? And the thing is, as a technician, as a market technician, you need to read the market and adjust your trading based on risk. Okay? If this was bearish, it should have fallen here. Right? Would you agree with that? Right? We would have had a lower high, or sorry, lower low, lower high, lower low, lower high, lower low in a trend, correct? So shouldn't we at least say, wow, this is unusual because we have a higher high. We're not supposed to have a higher high in a downtrend, right? So maybe it's an inverse crown pattern. Because you guys know what it's similar to Head and Shoulders. Might as well just call it Head and Shoulders. But you know, typically this will call it Head and Shoulders, right? For some reason, you know, people can see those very easily, but they can't see these, right? For some reason. So I don't know. You know, I mean, obviously, I don't think it's a reversal of a trend. So maybe it's just be cautious till be cautious until you know uh, the announcement on Thursday, right? But interesting. It seems like it could be a neckline, right? So, anyways, if we want to just quickly look at that, I think I've spent too much time on this already. But okay, you take a neckline. Let's say you think it's the neckline, and you take the distance from the lowest area to the neckline, and then you measure that as an extension. Okay. So line was about was about here. Okay. There's the bottom, right? Then what you do is you take this to the neckline down here and extend it, and that puts us right about 118. Okay. I don't want it to go up to 118, but that's what it says. I know that we got a lot of charts or a lot of lines down there from previous analysis. Just kind of ignore those for a second. I want to look at the higher fractal. 3A2 is even farther up. 3A2 Fibonacci retracement puts us at about 19 and a half. 50% is $1.20. That's a long ways off, my friend. So, looks like this retracement to 119 is about a 21.4, or 18 is a 21.4, and then 19 and a half is a 382. Well, the market's pretty oversold. So we'll see what's happening on Thursday. I think no matter what, I think we can agree the market is quieting down and that you should adjust your expectations accordingly and maybe throttle back your aggressiveness. Okay, I would still sell pre-London Open if I had resistance. I'm still a bear, but the market looks like it's growing cautious. Okay, request for Aussie Dog or Alpha Dog. And is this, okay, we're looking at an hourly chart. Is it trending up or down? What kind of strategy do you use in this one, right? Well, it seems to be sideways, right? Let's go farther back. These are my buy zones. I'm a bull. Okay. I know I talked about this recently, but anyways, you can see what's going on here with this gray zone. I mean, there's clearly something going on here, right? So if you were a bull, you had an opportunity to buy. Okay. If you're a bear, it's not great, is it? I mean, okay, yes, we're trending kind of this way, but I think you're shopping while you're hungry. But at least on the hour, the oscillator says prices having difficulty making higher highs. Zoom in a bit here. Um, hmm. Let's try to front run it with a 15. 15 minutes says you got to wait at least 2 hours. I'd say it looks pretty mediocre right at the second. And I'll tell you what's going on here. Well, you tell me what's the future value of the Aussie dollar? I've said many times, even though we're at 82 and 83, I've told you many times how much it's supposed to be worth. Ernesta says 75. Daniel says 75. All right, high five on the 75. Thank you, Wyatt. Thank you, Jim. Okay, good. So how come it's not falling right now? Type in a question mark if you don't know. Thank you, Ernestus. China news. What? Thank you, Wyatt. What China news? Yeah, the numbers came out yesterday. What was it? Industrial production, GDP. I guess it was GDP, right? Better than expected. Now, not good, but better, not, less bad, right? Less bad. Us. So, yeah. So, stabilizing the Aussie. If you're a bear, does this concern you? That China had moderately okay data during the Christmas season? I don't know. This is your job. If you're a bear, you identify at least 2 levels of resistance, and then you wait for price to head up there, and then you sell. Okay, you don't look for trades. You know, a lot of people, they log into their charts and they're like, oh, look at this cross. Oh, look at that cross. Oh, look at the oscillator. Oh, look at the MACD. Look at the stochastics. Look at the ADX. Look at this CCI. Look at it's going to turn. Look at this moving average rollover. Look, it's all ridiculous without, first of all, fundamental or long-term technical bias. Okay, and second of all, you need to be at support or resistance. If you're a bear, you need to be at resistance. I don't care about the CCI, the MACD, the stochastics, the ADX, whatever you're using. Moving average crossovers. It's all ridiculous unless you're at resistance in a bear or at support and a bull. Then you start folding in all these other things. All right, so if price is rising right now on the Aussie dollar and you're a bear, good. Because a one-off news event may not reverse your long-term trend. Believe it or not, that Chinese GDP may not change the central banking policy of Australia. Now, it's hopeful, it's possibly good news. Let's string together, a trend of 3 or 4 good GDPs, or maybe good GDP, good inflation data, good industrial production or data, and new order data, and wow, okay. All right, but one news event, one moderately not bad news event, probably not going to change the policy, right? So if Aussie dollar's strong today, well, good. Doesn't mean you have to sell it if you're a bear, but maybe you want to sell it tomorrow. Identify some resistance, prepare to sell. And if you're a bull, and that was news you needed, we already identified this as support. It was already oversold on an hour. It consolidated at support level. You could have went long yesterday if you're a bull. Look at this. In Asia yesterday, look what I drew. What was I thinking? Guess let me back out slightly. What was I thinking? You can see yesterday in Asia, which is in here, I already drew this before any candles existed. So what was I thinking? Well, I was thinking this area here might be support, and maybe it works its way up. Seems like somebody had a trade plan. Okay, so you could share if you're a bull. I'm not telling you you should be a bull. I'm not telling you you should be a bear. Okay, but if you're a bull, you would look for support. Oh, look, I found support. You notice how it consolidated, broke, came back on a smaller time frame? Okay, now what? If you're a bull and you want to buy, what you do is you take this previous swing high and you use that now, not as resistance, but as support. Okay, and you're looking to do this. Okay, very, very, very simple price action play if you're a bull. But if you think it's going down to 75, you're not interested. Find your next level of resistance and prepare to do the same thing. Okay? Upper, it is non-directional. So I might be a bear, but if I can identify this area as a at least a swing point, right? Then I have the ability or the freedom or the green light to be short-term long, but long-term short. Now that's a little bit of advanced trading, but I've been doing this for 10 or 12 years. Okay? Because I look at this and I think, hey, and I did this last week, guys, this seems to be supportive, right? So now all I have to do is catch it when it's oversold. So if you look at it on an hourly chart, now you can see what I was thinking in the Asian session, right? Do you remember yesterday's strategy session? We looked at Chinese GDP, and what currency pair did I say you might want to consider trading? Aussie. Well, this is Aussie. Don't you love it when I'm facetious? Right. So, anyways, now you get my point. All right. You don't have to be a rocket surgeon. It's more supportive. It's oversold. Off we go. Okay. But does that mean I'm a bull? No. But I was at least to the bare minimum short-term long, but be long-term short. Hope that's helpful. Also, you should also recognize that it's moving more sideways than anything. So shields up, red alert, be careful, especially with oscillator cycles, because you use oscillators in a range-bound market. Okay? I think we had yens were requested. Okay, let's hit them all. Yeah. Good. All right. Boom. Lots going on. I think we need to start with USD yen because we talked about it yesterday, didn't we? What did we talk about yesterday in regards to this? Okay. We talked about the 100% retracement. Okay. The drop into the roll reversal. I know this is very similar to a currency pair we just covered, but it's standard price action. Gone. And this might be the trade that reverses the retracement, if that makes sense. So I think fundamentally not a lot has changed, that the dollar is strong, that the Japanese do want the yen to weaken, and that once repatriation flows slow down, that will continue mission. Just don't know if it's in this month. Maybe seems a little aggressive to me, or we have to wait till April or May, which is probable. All right, but when do we continue mission? So this big, this big, arrow thing that I just drew. Imagine that like that's supposed to happen on, let's say, a daily chart. Okay, and the top of this one is 121. It's actually 121.50, but whatever. And let's just call this 115. It's really like 115.50 or something, right? But whatever. Let's just play some big numbers here. In 2 years, let's say we're at 140. 2 years. How about at the end of the year? 12 months from now, let's say. All right, so we're kind of just in here, right? On a daily chart. And this on an hourly chart is just a tiny little change in trend. And by change of trend, what I mean is the long-term move, let's say, is up, okay, for this pair. And we're just maybe completing this little drop here, this little arm. So that drop from 121 to 115 is many hundreds of pips. So that shorter term trend now is a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, lower high, lower low, big retracement, no lower low, higher high, higher low, higher high. Okay, the change of trend is from a series of lower lows and lower highs to suddenly higher highs and higher lows. Okay? It only took a week to do that. So I call that a J-low. Do you guys know what a J-low is? A big, wide bottom. In my book, Strategic and Tactical Forex Trading, which I wrote like 6 or 7 years ago, I taught how the Forex market reverses. Okay? And I described it as an old man easing into a hot bath. It takes some time. Nice and slow. Ah. All right. It's not fast. It's not a V-shaped reversal. Okay. And so maybe, just maybe, this is what's happening here, because we got a nice big retracement, but then we failed to make serious low, and then we had 100% retracement. So now we're range bound, right? So here's the range. So maybe the next move here is a pullback, gone. Now we got lots of resistance to get through, so I'm simplifying it, but maybe, just maybe, just maybe, just maybe, that's what's going on here. I have a feeling we get up to 120 and then come back down. Why? Because of the points, yo. That's why we're using them. Reversal pivots right here. Puts us in this congestion. And then also, I know a lot of people want the yen pairs to all go up. They want the Japanese yen to weaken. Uh, I'm not drinking the Kool-Aid yet on that one. And the primary reason is the seasonality of the Japanese yen. And so I think a lot of people just don't get it. They're not on the clue train. They don't understand. So they're hoping this goes to 130 and 140 starting now. I think there's a lot of degenerate gamblers that say, "Oh, we'll short the yen," so all the yen pairs go up, right? So I think people are putting money into the market, but I don't think they understand what they're doing. I think they understand, but I don't think they understand, right? So I think this goes up for a while, and then just the normality of the Japanese yen and repatriation slows it down. So I like this to go up. I think it'll go up. I don't think it's going to go up as far as everybody's hoping, because hope is not a strategy. But praying never hurts. Okay, Aussie's going to benefit here. Right? Good GDP numbers out of China will positively affect the Aussie dollar. I don't want to be short Aussie versus US dollar, but if I had to be, long the Aussie dollar on something, I'd rather it be yen. Okay, just draw my lines. So maybe, just maybe, Aussie does this, up a little bit, into consolidation, down a little bit, up. Okay, and then you notice this area here, pivot cluster, huge level of resistance. We're going to call it 98. Um, if things get really aggressive, if this Aussie stays strong and the yen does get weak, upside aggressive target this week is 99 and a half. And that's way up here. There's a weekly and monthly pivot cluster, plus obviously the psych level of 100. Could be interesting. Do we have the goal to get it to move the market that high? Well, currently the low of the market is the weekly central pivot point, which would predict an R2, which is 99 and a half. So yeah, plausible. Okay. But I think it's going to be very difficult to get through the first level. Okay. That's weekly R1 and a monthly pivot as well. So, again, I'm looking at it. You know what? 98 is a great place to start getting out. And if you get this all the way to 99 and a half, hey, it was just an unusually good week. And all right, good. Awesome. Okay. But the first major level of resistance is right here. Monthly central pivot point, weekly resistance 1. Let's see. Today we got the dairy auction prices. So kiwi is really quiet right now. Couple hours, it's going to move. I don't have the exact time. Google it. Pig. This is pig yen, otherwise known as the beast, otherwise known as the widowmaker. Let's take a look here. Come on. Okay. Seems to me somebody wants to buy there. Okay, that's the 4 hour. Let's drop into a 15. So it looks like somebody was very interested in buying that bottom. And you can see we're at the top of the previous area. This was supposed to have been support 2 weeks ago. So it fell back to the next level of support. Remember I said when you're a bear, you should find at least 2 levels of support and be prepared to buy them. So in this case, on a longer term chart, I would have hoped for this upper area to be support, but it failed. The second level did not fail. Great. But this area would still act as resistance most likely, so I'd be careful. So if you're a bull here, it'd be a bad place to buy, but maybe, just maybe, you get a nice little retracement, long gone. Because as a bull, you do not buy at resistance. As a bull, you buy at support. So if you're a bear, you should probably get ready to sell this. You got a pivot cluster, you're at resistance, and it's overbought, right? Overbought identified by an oscillator. Where's the resistance? Well, you got your monthly pivot, just above that a weekly R1, so it could go a little higher. It could go up to, 180 and a half, but, we're basically at 180 now. So you got a psych level, pivot point, and then, of course, this gray area is resist based on price action. Right? And then we got market resistance, psychological resistance, and technically overbought. So if you were a bear, you would drop into a smaller time frame here and sell it. Now, as a bull, you want the bears to do that because, of course, they're wrong. That's based on your analysis. So you let it fall, maybe into this pivot cluster, and then you look for the same thing. You want the oscillator to be way down low, and you roll it to the upside if you're okay. Daniel's got the dairy report. 1200 UIC, but I don't know what time it is now. What is that, like 2 hours from now, maybe? Well, probably less than that, right? Well, 2 hours. Was it 10 UI? Yeah, a couple hours. Cool. Get ready for that. Remember, I told you, Kiwi hasn't moved all night. It's going to. Get ready. Less than 2 hours, the New Zealand dollar is going to start moving. Hey, you're welcome. All right. Euro yen. Check this out. If I was a bear on this, I would be preparing to dump it like you wouldn't believe. Boom, boom, boom. Next level of resistance as a bear. Okay. Even if price went up here, so let's say price did this. The oscillator would probably diverge. All right. So if you're a bear, that's what I would look at. I've been doing a lot of bullish plans, so I'm going to keep that as a bear. I have no problem selling euro. I don't see head and shoulders like euro dollar. I don't see consolidation like euro dollar. Right? I just see a downtrend. A little concerned we're through the 2155. And then, of course, we're at obvious support. Okay. I don't mind selling it one more time, but I think a good place to be conservative. What do you think? Kind of feels like we hit somebody's target, doesn't it? Somebody already had that planned out. So the next wave would be like, probably have it planned like that. Yeah. Feels like a pretty reasonable move to the upside for a lot of these yen pairs. But like I said, I'm not drinking the Kool-Aid yet as far as long-term long, but I don't mind longing. And if I'm proven to be a little too conservative, I'm okay with it because I'm not saying don't long it. I'm just saying I don't think it's going to go up for the rest of the year without, another significant pullback. But get in the trade, jam your stop, take a walk, let it run. Now, this time of year, you can get very frustrated. So let me kind of explain another way. There have been times in the past where in this time of year, I'm longing reversals for the yen pairs, not this pair. I mean, this is probably the worst example, but whatever. Um, you know, you get reversals at support. You want to be long-term long, but here's what happens. You long it at the end of January, it goes up, you make 300-400 pips, and it comes right back down. Okay? Then you long it again, it goes up a couple of hundred pips. It comes right back down. Then you long it again, it goes up 150 pips, comes right back down. And then it does this all summer, and then boom, gone in September. Okay? And you can get these big waves where, you can get a 400 pip move and it comes back 300. Then you can get a 300 pip move and it comes back 200. 200 pip move comes back 150. And then it just does nothing. And that's kind of what I think is happening. But these are all nice moves. And I think we're kind of just this part, okay? So I think it will go up. I'm just not drinking the Kool-Aid that about it going up forever, indefinitely. Okay? Yeah, so now we're talking about this particular pair. This particular pair is a lot different than the other yen pairs because the euro is weak. Not today, but generally speaking. And so as a technician, this is an obvious sell. Okay? That's just, so I have no choice. If I'm going to trade, I have to sell this. But some of the other pairs like, some of the other yen pairs that we looked at, let's say USD yen, it's already gone past that type of challenge, right? We've already had this move like this, and now we're up here. So in that case, as a technician, I need to be bullish. Because we have a higher high after consolidation. So I have to set up 1, 2, 3s and stuff, right? It's my job. We don't have that on the yen. So in this situation, we don't have it on the euro yen. So in this situation, if I see buying opportunities for yen pairs, I probably wouldn't do it on the euro yen. But if I saw a selling opportunity on the yens, I'd probably take euro yen. Okay? All right, and then let's just zip over, take a quick look around the world. Around the world, around the world. That's not what I wanted. Cool. All right. Boop, 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 boop. All right. Gold. Getting pretty close to a psych level, huh? 13. I'd be careful around these psych levels. Okay. And if you go and you look at where support and resistance has been in the past, you might say to yourself, this kind of looks like an interesting level, doesn't it? Oh, snap. That's where we are now. So as a bear, I'm not saying you should be a bear, but if you were a bear, shouldn't you be identifying levels of resistance in which you should short? In particular, when the market's overbought? And then you kind of zoom in now, right? It's flipping on a 4-hour. How does that feel on a 1-hour? So a bear would probably be looking to sell the test of 13 based on previous levels of support and resistance, otherwise known as price action. Okay? As a bull, it'd be foolish to buy there. Okay, next, oil. Okay, what was the general plan? Sell the retest of 50. And so far, so good. Previous level support coming in here. So a bear would be thinking kind of like down to support. Then you want to take fib of this area. Oops. And channel line it and down like this. Okay. The target that we created 2 weeks ago now, was it? Is 42.5. Right here. Okay. If we fail to get through this gray zone here, what do we have? Inverse head and shoulders. Okay, you see this, and then rises. Then you got okay. Then you would take the neckline, the distance to the neckline, and you got yourself something like that. So that's crude oil. Remember, above us is the big fib zones on the higher macro, but that's not going to happen this week. So, anyways, we'll do that later. S&P 500 surviving. Remember, this orange line here is like the bear bottom. This market just has to reverse, just has to. We talked about last week. Like any lower than this, it's like a long ways down. So what it did is it gapped open the next day, and then there was a million billion orders to buy here because everyone just needed it to go up. and now it's continuing up. Thank goodness. But for technical reasons, we just couldn't really, if it got any lower than that gray area, it was like a bottomless pit. And if you recall, we talked about more people make money on the way up than on the way down. So it just had to go up. And well, so far so good. It went up. And it has lots of room to keep going up. It was just going to be brutally ugly if it went down. And that's all we have time for today. So peace on earth. May the pips be with you. May your profits be above average. I'm already looking forward to seeing you tomorrow, 7:30 in the morning Eastern Time, London lunch. Thank you for Traders Way. If you like these, you can participate every Monday through Thursday. Remember, when you're trading with Traders Way, you can trade Forex, energies, indices, metals, and even binaries. Now, I can teach you scalping, hedging, spotting, swinging, carrying. You just got to ask. See you tomorrow.